You may not want to buy a home just yet. In this video, I'm going to share some good news and some bad news. Let's start with the bad news. The Mortgage Bankers Association met and they foresee that mortgage interest rates will not go below 6%. They may go a little bit below 6%, but they're foreseeing them hovering around 6% until at least 2028. Now, top economists in the United States are looking at all the numbers and they know and foresee that quantitative tightening is about to stop. Now, what that means is Jerome Powell is going to be looking again at making a cut in the interest rates. Now, what that means for you as a buyer is that rates are going to come down. What that means for you as a seller is that rates are going to come down. The downside of that is inventory is at a record high. You see in states like Texas, Arizona, and Florida, we've seen a surge of people moving to those states. And when we see a surge, typically they're the first states to see a little bit of a cutback. So we are seeing more homes being placed on the market in those states. As a result, the current inventory of homes that's currently on the market is 867,811 homes. That's the current number of homes listed for sale. Now, what's really cool that you need to hang on to is 41% of the homes that are currently on the market for sale right now are having price reductions. That's right, price reductions. So bottom line is home prices are coming down. Now, when we look at the inventory of 867,000, that's higher than it's been in the last 5 years. Now, what that means for you as a buyer is you have more homes to choose from as we're ending the quarter of 2025 and going into spring of 2026. Now, I say don't buy a house just yet, and the reason why I say that is because they may lower the rates. On the flip side of that is you have to understand that when they lower rates and people hear of the rates being lowered, more people are going to jump out and buy houses, which means more inventory being absorbed, meaning more buyers are buying houses, meaning that you'll see prices actually go up a little bit. Why is that? Because you have a surge of buyers. When there's a demand for anything, it doesn't matter if it's houses, cars, boats, it does not matter. When there's demand, you'll see the prices tickle back up. And that's a big part of the reason why they haven't made a drastic cut in rates. You see, if they make a drastic cut in interest rates, if the rates right now were to fall to 5.25% or even 5.5%, you would see quite a bit of a surge in home buyers that are waiting on the fence right now because literally for the last almost 3 years, interest rates have been the highest they've been in a long time. Now, when I say long time, I'll give you some numbers. It's been 13 years. For example, from 2009 to 2022, mortgage interest rates never went over 5.25%. You have to understand 67% of the people that currently have a mortgage on their home, and you may be one of them, and so give me a thumbs up or say, yes, I do. And that's one of the reasons why people aren't moving, because it's like, wait a minute, I'll just soon add a pool, add a detached garage, add on to the house, convert a room, update the kitchen, the baths, instead of moving and leaving that rate. Now, the good news is if you're a homeowner and you bought a house 5, 6, 8, 10 years ago, you're gaining equity. Homes are going up in value. You've paid down your mortgage balance on the property and you've gotten a pretty good rate, right? But literally for 13 years, mortgage interest rates did not go above 5.25%. And then in April of 2022, mortgage interest rates literally almost doubled. They went from around 5% to close to 8% literally in 7 months. So from April till October, interest rates nearly doubled. As a result, nobody was selling their homes because people that sell also buy. And it's hard for people to justify selling their home with a 2.5%, 3.5% rate and turn around and getting a 7% rate. Now, some good news is on October the 29th, Jerome Powell, the Federal Reserve Chairman, is going to meet again, and he's going to determine whether or not, or tell us whether or not they're going to make an adjustment in the rates. Now, if they make an adjustment in the rates, it's probably going to be about 1/4 basis point, which basically puts the rates around low 6s. But you have to understand that the Federal Reserve doesn't have a direct connection, if you will, or it doesn't affect them directly. They do have an impact because when they adjust the mortgage rates, the rates are adjusted because the Federal Reserve adjusts the rates, and that's the interest rate that the banks charge each other. So if the banks are charging each other more, guess what? They charge us more when it comes to buying a home and getting a home loan. So look, if they do adjust the rates down in around 6%, that's going to be the lowest that it's been in all of 2025. And you're going to see more people kind of get off the fence and start buying. That's why I tell people, get ready, try to get your credit score right, pull my FICO, pull your credit score. I'll share with you here in just a second how you can buy a house. FHA, you only need 3.5% down. You can do USDA. You only literally need $400 to buy a house with a USDA loan. I'll share some of that with you here in just a second. But here's the difference, right? Here's the difference between a 6% rate and a 6.5% rate. It's $71 a month on a $300,000 house. If you buy a house that's less than that, it's less per month. But I'm just using that hypothetical as an example. On a $300,000 home, if you borrow $300,000, you're going to be paying $71 more at 6.5 as opposed to 6%. The reason why I share that with you is oftentimes that's maybe not eating out once a month, or because things have gotten expensive, right? Give me a thumbs up on that. Or it may be a few Starbucks. Bottom line is that if it means buying a house now as opposed to fighting the surge of people and then losing the house, and then home prices may be going up in the spring, because what it boils down to is demand and supply. And I share that with you not to talk you into anything, but just to kind of give you some food for thought so you can make the best informed decision when it comes to buying a house now as opposed to holding off. It's $71 a month on a $300,000 loan. Now, a couple of things that you'll want to do to get ready is pull your credit score, pull your credit report. You'll want to do the Tri-Merge credit report. That's Equifax, Experian, TransUnion. Those are the three. You can do that by going to myfico.com, for example. You may have to pay that, $40 to get your credit. I don't know why we have to pay to get our own damn credit score. It drives me a little crazy. I'm sure you'll probably agree. If so, give me a thumbs up, you know. But we had to pay for that. But for $40, you'll see what mortgage lenders see. You'll see your full credit report. And oftentimes there may be something negative on your report that you can dispute. Now, in terms of boosting your credit score, I always advise people, look at everything that you owe, every credit card that you owe, and start paying as much as you can to pay the credit card with the least amount of balance off. It's called the snowball effect. Pay that off, and then roll the money that you're using for that to pay off the next one and the next one and the next one. And don't cancel any cards. So oftentimes people cancel their credit. And when you cancel your credit, you're basically canceling out your credibility. So I know it sounds crazy, but pay off your cards and don't cancel your credit cards. Now, something else you'll want to do to get prepared, and don't do this after you contract on a house, is stop spending money, period. Tighten the belt, start saving money as much as you can. I know it sounds crazy because in today's economy, the price of meat is up almost 16%. Everything has gotten more expensive, right? But if you can stop putting things on credit and stop spending money, it shows a good pattern that you're saving money and you're definitely not putting things on credit. Now, one of the biggest mistakes, and no one tells us this, no one tells, lenders don't tell people this, they just kind of assume, because you know, we're not taught this stuff, right? I was talking with a gentleman today, and he said, man, I got a business degree. I got to have a general business degree from college, and they didn't teach me about credit. They didn't teach me about finance. They didn't teach me about borrowing money. And maybe you're one of those out there that went to college. If so, chime in and give us your 2 cents, because I think it's kind of crazy that they don't teach this stuff in high school, and they don't even teach it in college when you're paying for it. And that's when we need to learn it the most. That's how we get ahead financially. But what it boils down to is this. If you contract on a house, especially if you contract on a house, just know they're going to pull your credit 2 to 3 days before you close on the house. So don't go spending any money. I can't tell you how many times people are under the assumption that, well, they already pulled my credit, I'm approved, I'm good to go, let's go buy furniture. Let's go buy a computer. Let's go buy a new car. Listen, if you're going to buy a house in the next 6 months, don't buy anything. Cars, any big ticket items. Stop the spending as much as you can and focus on the goal of buying a house, because you can buy a house like the one I'm walking around. This one's out in the country a little bit in Abita Springs, Louisiana. This house literally a couple $100,000, 1,350 square feet, like on a half-acre lot. You can buy houses like this through a USDA loan, United States Department of Agriculture, and it only costs you $400 because the government's giving you the money to buy the house. They're giving you a 100% loan. Now, you have to qualify. You have to get approved. There's a difference between being qualified and approved. Approved has nothing to do with the house. You just talk with a lender and you're going to give them everything. They're going to verify your income. They're going to pull your credit. They're going to see your taxes, all of that. And then once you're approved, it doesn't matter about the house. You just have a piece of paper you can give to your real estate agent. Then they can give to the seller and show, hey, I'm good. I'm like having cash in the bank. I can buy your house. Bottom line is, don't go crazy spending money. Just hold on to it as much as you can, even after you contract a house. So do I think we hit bottom on the interest rates? Yeah, I think we probably have seen the bottom, or we will see the bottom. And once again, Jerome Powell will meet tomorrow on the 29th, and I'll give you an update on that. I surely hope the rates go below 6% and even into the 5s. I'll be the first to admit that I was wrong, and I promise you, you'll hear it from me before anybody else. I'll be shouting to the rooftops. The rates have dropped, the rates have dropped, the rates have dropped. So listen, thank you for watching the video. Give me a thumbs up, share this video with anyone you think may help. Subscribe to the channel, ask questions, and until next time, thank you, and may God bless you.